Hey everyone, Dan here. We are just before market close on Friday, July 23rd. We're going to take our daily look at Clove. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also keep in mind that these are my own thoughts, opinions, and ideas. These aren't meant to be, nor should you take them as investment or trading advice in any way. Do your own due diligence, come to your own conclusions, and act on those. All right, so Clove having getting beat up a bit today, and we see here the volume still well under half of the average volume the last 3 months. It's certainly might make it almost a half, but I really doubt it by the end of the trading day today. And we do see here on the chart, unfortunately, it's trying to sort of get it to hold. It's probably better represented on the 5-minute chart, trying to get it to hold this channel that it had been in for a couple of days, and then it had that huge run up and came back down, and that's always a big danger. I had some hope when I saw this like W form, but there's so often when you see something break the channel, especially to the upside, and then fall back into it, it is often very, very hard for the swing of that to not then pull the stock down through the other side and it just break the channel to the downside altogether. Now, obviously, that can also happen to the upside, and Clove is a volatile enough stock that could happen. But to me, one of two things are going to happen here. Either we can get, sorry for the baby crying, but we're in close quarters this week because I'm traveling and I have kids. So what are you going to do? But anyway, a couple of things that I'm going to look for to be happening here. It is, if it can hold at this level, which, if you see here today, it's still continuing slightly down. It's leveling off here at the very end of the day, but it is leveling off in a relatively nice area. I mean, not nice if you just, got beat down 6 or 7% today, but it's coming down, and if it can hold this area, this same area as was held here, as was held here, as was held here, this is a very solid support zone for it and could give it a nice spring, just because I guess there's sort of like two prevailing thoughts that I have when something does something like this. One is that the selling pressure that sort of drives the drives the share price down there, tends to die down as it gets to that point, and then the buying pressure is just so strong that it can't sort of break below that price. The other thought that I have on it that is sort of the other way of thinking is that there, at most price points, or at any price point, I guess you could say, there's only so much buying pressure that can be exuded at that point. At some point, all the folks who are interested in buying at that level have bought. And that's my only concern about seeing something like this. It is good to see it repeating support zones, but only a certain number of times, right? Because then at some point, that downward pressure that keeps returning it to that area of support could break through the buying pressure that has shown to be there in the past. And if the buyers don't show up at that price point anymore, then the price will come down further, looking for its next level and say, okay, so if it's not here, then where's the buying pressure coming from now? Is it down here closer to 7, or what is it? So that would be kind of my only thought on the concern there. So if it does bounce off of here, I would not want to see it come down near to this $8-ish area again, because I think that it's asked enough of the $8 buyers at this point. Now, as you can see, I do have this lower zone at 708 if it's needed. Obviously, I hope it's not, but we will have to see in the days ahead. But for the time being, don't really see much of anything on the chart that has changed, other than we've broke this channel and now we're still trying to say, okay, so it's $8 to 4 now. Like, where can we start to build some upward momentum from? Where can the price start to claw back to? On the indicator side of thing, and then we'll jump over to the data and to the dark pool info. But just while we're here, let's take a quick look. The MACD, now we do see the signal line threatening to connect with the MACD underneath the baseline, which would then give the MACD an opportunity for a bullish crossover. Bearish momentum has been there all day yesterday, basically, and then today, but it has been dying down that entire time. That said, the price, even though it's stabilized kind of at the moment, has been getting pushed down further. But MACD does have the opportunity for below the baseline bullish crossover, which would be a good sign. RSI, not much to say here other than I really want to watch to see what it does when it approaches the midline again, if it can bounce off of this near oversold area. And then the MAs, as you would imagine, everything's in a bearish formation at the moment. So we have opportunities for those to cross over. But again, as the price moves up toward these MAs, the MAs will likely act as a bit of resistance. Of course, if it can flip them to support, then it could help lift us into these upper price targets that I have as future or upper resistance zones, if it can get there. So looking at the data that we have, Ortex is reporting that there was a decrease of almost 5% in the short interest today. That said, it still is slightly over 20% of the free float being shorted at the moment. Keep in mind that's an estimate from Ortex, but it is nice to have daily estimates and not have to wait weeks or months to get data out. We'll talk about weeks or months old data in a minute. But yeah, obviously shorts aren't really going anywhere. This utilization is still very high. Remember, utilization means, if it gets to 100, all of the shares available to borrow or lend at a lending program have in fact been lent. That's obviously how short sellers sell. They are lent the share and then they sell it into the market. So, it's getting harder and harder to find shares to borrow in order to short sell them into the marketplace. So take that for what you will, but that's what Ortex is reporting today. Now, I wanted to take a look at dark pools. Now, dark pools is sort of like a colloquial term. It's something that's in sort of like the popular trading culture nomenclature today. But the exchanges refer to dark pools as alternative trading systems, or ATSs. All right, and a lot of times I think that's about as far as folks go. So today I wanted to go through the ATSs, but then also talk about the non-ATSs, and you'll see why in a few minutes. So if you go to this site, and I would recommend you do this yourself, you can go through and you can go to the OTC data, and then you'll see basically they give you this thing that you have to opt into viewing the data, and they basically say we rely on folks to report this data to us. We can't necessarily vouch for the accuracy of it, and so don't make any decisions based on this. So they leave themselves a wide range of caveats, but so it goes. But here, if we look at the ATS issue data, this you can search for by symbol. We'll talk about these tiers and reporting choices in a moment. But here we see CLOV for the week of June 14th. We see CLOV had 6,228,112 shares spread out over a bit over 40,000 trades that happened on the ATS. So keep in mind that's just on the ATS, all right? Now you can click on the details, and this is just in a week, all right? So I know we get about this volume. Well, we could just take a look here and flip to the daily. I know on a lot of these days we're getting volume that's far out, exceeds that 20s, 30s, 40s million in a day versus the 6 million or so that's happening in a week. But we'll talk about sort of how that could impact in a little bit. But click on the details here. Just a couple of things to note. It gives you the description, which is, it looks like the alternative trading system where the reporting is coming from. I believe they say there's 59 is the number that's coming to mind that are reported to exist or something like that. But you can look up how many ATSs exist. And then how many shares were traded on that ATS, the updates, the trades, and trades last updated date. So that's the amount of details that you get, all right, for this info. Now, if we come over to our next tab here, like I said, these are the reporting options that you have. Tier 1, stocks included in the S&P 500, Russell 1000, and selected exchange-traded products. Tier 2 contains all other NMS stocks. So if you're going through, just know that Tier 2 is where you will find CLOV, and you can just use this drop down to flip through different dates. Now, the reason that we're looking at the June 14th date and not the June 28th date, which is the more recent one, is because there's no data. And same thing with the 21st. So the 14th was the most recent one that had CLOV in it, and this is what you'll see when CLOV is going to appear. If it's not there, you'll just get this thing that says no data available, and then you can stay on that, because if you go to another date where it's not available, it'll just do that too, and you don't have to retype it in, or so it seems. And then if there is that data, even though it's not showing the ticker here, if I click on a date where it does appear, then all of a sudden I'll see the list of symbols again. I can punch it in, and then it'll sort of show me that. So double check that on your own, of course, but that's how it seems to be acting for me. Now, here's Cboe has this article, and we want to talk a bit more about dark pools in general and unpacking a little bit of the nature or the depth of dark pools. So, starting with this paragraph, there's been a substantial increase in the amount of trading on the TRF since the spike in market volatility in March 2020. As illustrated in the chart below, in May, this activity averaged near 42%, and the trend continued in June, excluding event days, which tend to cater toward closing auctions. All right, so if we come down here, FINRA data they're talking about is broken out into two broad categories: ATS, which is what we were just looking at, and non-ATS OTC. The data generally shows the majority of trading is on the non-ATS category. Listen to that again. The data generally shows the majority of trading is on the non-ATS category, which comes from broker-dealers that execute a client order away from the public markets. Only about 11 to 12% of market volume is executed on ATSs, meaning this is not driving the recent rise in TRF trading. Non-ATS volume has grown from around 25% at the start of the year to nearly 35% in May. All right, so they're basically saying around the time of this volatility that we saw in March of 2020, since then, they had been tracking this large increase in non-ATS OTC, which is not what we were just looking at, the ATS. Okay, which they're saying is only 11 to 12% of market volume. So I think that that's where, like, as far as a lot of folks go, they're looking at the ATS because they will Google what is a dark pool, and somewhere along the line they'll get to, a dark pool is, actually referred to as an alternative trading system by, insiders and regulating bodies, what have you. And so then they're looking for ATS data. But what this article is saying is non-ATS data is where it's at. So you can go through and just sort of like punch this in or Google this article and read it. So I don't want to sit here and just orate an article to you. That's really boring, obviously. But to talk about trade size, type of trades. Now they do end with this sentence that I almost wanted to die after I read, but then they make up for it in the second sentence. But on the whole, having more destinations to trade is generally a healthy sign for the market. And I was like, yeah, right. But then they admits that more competition among marketplaces improves customer experience. However, increased transparency is important for marketplaces in order to foster a competitive landscape. So yeah, now I have a lot of issues with the idea of dark pools anyway, that they shouldn't influence the price as they're trying to execute large buy and sell orders. I actually think why? Like, I'm sure that there's reasoning behind it, but to me, if there are huge buyers or sellers, I kind of don't see why that shouldn't be reflected in the public market. They should have to deal with, if they want to go out and buy 4 million shares of a stock, I kind of feel like they should have to deal with the increase in the ask that is going to come with that on the open market. But that's neither here nor there. That's just an opinion of mine. Okay, so now we basically are at a situation where we know that the non-ATS is important. So let's go back to our friends at FINRA. We see here OTC non-ATS issue data. And there we can search by month, which is just a little easier because there's fewer drop downs. And so I can look for CLOV from May. And here I see CLOV on the non-ATS in May had 106 293,753 total shares traded in the month of May. So, that is obviously a big departure from, go back here, and we see our weekly. So even if we 4x this, or even 5x it, just say it's 30 million in the month, versus the non-ATS, which is at 106 million for the month. So, just keep in mind, this is sort of making me wonder the extent to which that utilization is very high in the short data that we saw. Shorts are kind of like peeling back a little bit, it seems. But, if you wanted to still drive the price of a stock down, what would prevent you from executing large orders on a non-ATS platform, or I guess it's not really a platform, in a non-ATS manner, and buying them that way? So then it's not going to be reflected on the public exchange. It's not going to drive the price up. And then selling them directly into the open market and causing huge sell-offs or huge selling pressure because you're dumping these on the open market when you purchase them via non-ATS routes. So, I don't know that that's what's happening. I don't know that that's playing a factor here, but there's obviously a large quantity that is being consumed, and it'd be interesting to kind of know why or how, if it does in any way, shape, or form interplay with obviously a large number of shorts trying to profit from keeping the price of CLOV very, very low. Now, if we look at the 106 million in a month just on the non-ATS, just wanted to look at how that interplays with the float size. Now, the float itself of CLOV is just 129.1 million shares. So, that in and of itself, now, yes, of course, those can be traded in and out every single day. So, this is spread out over the course of a month, but still, that doesn't account for, additionally, the ATS volume that there is. So there's ATS volume, there's this non-ATS volume. That's all happening outside of public view with no impact on public price, apparently. And then there is, layer on top of that, the volume day to day of the public market, 20, 30, 40, 50 million a day. So, these and how they then interplay with, a float size being thus is another question I have, and can unpack it more broadly as we go through sort of these interesting data points, or at least I think they're interesting data points. But I think there's potentially more to try to figure out there, and I think we could get deeper, more granular into a lot of this data, monthly versus weekly versus share size and trade size and things like that, and see how some of this stuff might be lining up, might be making sense or not making sense, and what questions that could raise. But like I said, we'll save that for a future video. I would suggest you go dig through any of those sites yourself, see what's interesting there to you, make your own discoveries, and share it in any way that you would like. Of course, I think it's always valuable to share the information that we find. So we're discovering a lot as we go through being a trader in the marketplace these days. But I hope that you had a good trading week, and I hope that you enjoy your weekend, and I appreciate you watching. I will see you in the next video.